first thing you can do to no longer pay so much money in taxes is to stop earning money. This is actually what wealthy people do. See, the IRS taxes you based off of how much money you earn. And so if you can show the IRS that you didn't earn any money, well, then they can't tax you because you didn't earn any money. If you only have one stream of income from your job, this one's going to be harder for you to implement right now, because what wealthy people do is they show the IRS that they didn't earn any money. What they do is they make money from their investments and their assets, but they don't actually earn any money themselves, because when you earn money from your job, that money is automatically taxed. If you own a business that makes $100,000, you don't pay taxes on how much money you make, you pay taxes on how much money you keep. So if you make $100,000 and then you spend all $100,000, well, you only have $0 worth of taxable income because you made $100,000 and you spent $100,000. A couple of years ago, my accountant calls me up and he says, Jaspreet, we have a problem. You have a big tax bill coming unless you can go out and spend more money. So I had to figure out how I could spend $300,000 in the most effective way possible in my business. That way I'd have a smaller tax bill at the end of the year. Now, if you have a business, you don't want to just spend the money to spend it, because then that's just like throwing the money in the garbage. Yeah, you'd have to pay some of that money in taxes, but it'd be better to spend some of the money in taxes and keep the rest of it than just taking all of that money and throwing it in the garbage. So now what you're trying to do is you're trying to figure out how do you take this money, spend it, but grow the business. That way now your business is worth more money and it's going to make more money in the future. That way you don't have to spend that money in taxes, because if you don't spend that money, then half of it is going to go to the IRS. But if you can spend that money and make more money in the future, well, now you're using that money to invest in yourself and make more money instead of giving it to the IRS. So I spent it on things like consultants and classes and advertising and marketing. That way now I'm spending the money. That way I don't have to pay as much money in taxes, but I'm spending it in a way that's going to benefit the business in the long run. That way I can make more money in the long run. And this is the same reason why you see so many YouTubers making so many videos at the end of the year, because they're trying to capitalize on all the advertising revenue that companies are spending. Because at the end of the year, October, November, and December, this is when companies are looking at their books saying, oh my God, we have a big tax bill due. Let's spend as much money as we can in advertising and marketing. That way we don't have to pay so much money in taxes. That means they're paying more money to YouTube to spend on advertising, which means that YouTubers are going to make more money per video in October, November, and December, because you have so many advertisers that are spending money on advertisements. So YouTubers are trying to capitalize on that and make as much money as possible towards the end of the year. And then comes January, February, and March, and now all these companies run out of money and they're not spending any money on advertisements, and now YouTubers are struggling to make any money in January, February, and March. The second way that you can avoid, not evade, but legally avoid paying taxes is by using debt strategically. Elon Musk really demonstrated how this works back in 2021, because he ran a Twitter poll to his followers asking if he should sell his stock. Now, while that seemed like a harmless tweet, he actually had a hidden agenda behind that tweet. Elon Musk doesn't pay any taxes. And the reason why he doesn't pay any taxes is because of what I said in number one. He doesn't earn any money. He doesn't take a salary out of his company, and because he doesn't earn any money, he doesn't have to pay any taxes, even though he's one of the wealthiest people in the world. Well, back in 2012, Elon Musk was awarded something like 22 million stock options for Tesla stock that he would receive in 2021. When he received these Tesla stock options in 2021, that was the first time that he earned money in years, and now he had to pay taxes on the money that he earned, but he didn't have any money to pay these taxes. That's why he ran this tweet poll, because if he sold his stock, now he'd have some income that he could use to now go out and pay his taxes. At this point, you might be wondering, if he's one of the wealthiest people in the world who doesn't have any cash in his bank account, how does he afford to eat and pay his mortgage? Thanks to the help of strategic debt. Elon Musk is, not surprisingly, one of the largest shareholders of Tesla. And so when he starts getting his options or shares of Tesla at $6 a share, and the price of Tesla goes up to $1,000 a share, he has a lot of money on paper, because his share prices have gone up from $6 to $1,000. Now, he doesn't actually get that money in his bank account unless he sells these shares, but if he sells these shares, then he has to pay taxes on these shares. So what he does instead is he borrows against these shares. He takes out debt. If he has $1 million worth of Tesla stock, he can go to the bank and say, hey, how about you give me a loan for $500,000 and you can use my Tesla stock as collateral? He's essentially refinancing out of his Tesla stock. So now what happens is he has cash in his hand, which is debt, and now all he has to do is pay some money back plus interest. Now this works great, especially when you're in an environment with such low interest rates, because now he can borrow money at 3, 4, 5% a year, while his stock can grow by 10% a year. So he's making a profit by borrowing this debt, and he gets to borrow the debt tax-free. If you go out and borrow $250,000 to buy a home, you don't have to pay taxes on the $250,000 that you get from the bank. And if you go out and you refinance another $500,000 out of your home, you put $500,000 into your bank account. But again, you don't have to pay taxes on the debt that you get because this is money that you have to pay back. It's not income that you're getting. So when Elon Musk takes debt out against his Tesla shares, he gets this cash into his pocket debt-free. He can pay some of the money back and interest, but the value of his stock keeps going up, so he can just borrow more if he needs more money. This is a strategy that a lot of wealthy people use, where you own assets and then the value of your assets go up. When they go up, now you can borrow against your assets. You take this debt, which is now tax-free in your pocket, and you can live off of this money. You can spend this money. You can live your life. And now you have money in your pocket, tax-free to spend. When I sat down with Robert Kiyosaki, the author of Rich Dad, Poor Dad, this is the strategy that he says that he used to become a billionaire on paper, and it is a strategy that made him wealthy. Take a look.
The reason I pay no taxes is because I borrow money. I'm a debtor. The only way the economy, and check this out. I mean, all you communists out there, check this stuff out. I am a billionaire in debt. You know why? Because I get tax breaks for borrowing money. And the reason I am so rich is because I'm in debt. And my friend Dave Ramsey says, live debt free. I'm going, well, you're an idiot. I mean, he's my friend, but I say, Dave, I like debt. He says, I know, but most people can't handle debt. I said, I agree. But that's why there's no financial education in schools, because if you knew how to handle debt, you wouldn't save that crappy dollar you have in your hand. I'd rather borrow the money tax-free.
Now, I wouldn't feel right going to the third point without giving you a little bit of a warning, because taking on more debt does come with more risk. I mean, anytime you take on debt, it has risk, but if you over leverage, then it comes with more risk, because we've seen that if you over leverage on anything, whether it's stocks or real estate, and then you start to see the value of the asset go down, now you're underwater and now you can really struggle. So if you do go down this route of using debt as a way to live tax-free, just make sure that you're being cautious, that you're not over leveraged, and you know what you're doing. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you gotta do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.